with rents rising, obviously a big article in the Seattle Times about soaring rents are forcing pretty big lifestyle changes. As I mentioned before, had people gone about buying a house when we had talked about it being a really good time maybe a year ago or a year and a half ago, they wouldn't have been dealing with this, the problem of rents continually going up. But now maybe this is, most people move when they're in fear rather than when the opportunity is there. So now people are maybe starting to get that pre-approval itch or ready to go buy a house itch. How do people start? I mean, out of this whole frenzy, we're going to hit a normal market. Kind of the process is going to be back to normal, totally different than it was over the last 4 years. Do you think people have forgotten what a normal home buying process is?
I think they have. I think the biggest challenge we face out there every day is that the home buyers flat out just, because they don't really understand the process well enough, and that's really what the intention of today is and your show every week, is to give people the useful information they need to make the best decisions. So when people are out looking to buy a house, and obviously mortgages have to come into play somewhere, a lot of people automatically start with interest rates as being their first qualifier to get pre-approved and to start that relationship with a lender. And the challenge is it's just an inefficient way to start for two reasons. Number one, everybody kind of has the same stuff. Everybody, give or take on any given day, is going to have the same programs and the same rates. And number two, interest rates are really irrelevant until you actually find a home and you're under contract and you have a specific period of time that you have to get that loan closed in. Okay? So if you say, well, what are the rates, and you're just starting the process, there's nothing to hold any lender to whatever the rate they quote you. The
other day, I came up with mortgages are kind of like gasoline, where there's you can buy gas at any different gas station all over, right? But if you go to like the cheapest one, it's not going to make AM/PM. Well, yeah, I don't know about busting on AM/PM. They got lots of good stuff.
But you're going to get a corn dog on there.
No, I got a corn dog and a soda. But no, really, I mean, you can go get gas anywhere, right? And you can go to the scuzzy one that is like probably a little cheaper and the bathrooms are nasty and everything, and it's like you don't want to be there. And it might be 5 cents cheaper. Or you go to a nice one, I don't know, you go to Medina and you go some fancy one and it's a little bit more expensive. But the reality is that they all sell gas. The same way that all mortgage brokers pretty much sell money.
True.
And you have to understand what's important. And to your point about like time frames, all of a sudden, if you're almost out of gas, it doesn't really matter where you go. You're going to go into the next gas station.
Yeah, and I think today more than ever, in my opinion, you need to have, in this market where we're still incredibly competitive, you have to have every advantage you can as a buyer. So you need to have the best possible representation from a real estate agent side, and you need to have the best possible representation from a lending side, and be prepared and organized and have your ducks in a row to have the highest probability of success, because we're still, even though rates have gone up a little bit over the last couple of months, the market is still incredibly competitive that you may have 5 to 15 offers. What's going to set your offer apart from everyone else? And a lot of that comes down to representation, how you structure the deal, and how organized you are with your finances.
So talk a little bit about that process that is the best way to go to get somebody from, hey, I'm renting an apartment to, hey, I own a house.
Yeah, so the first step is you have to find a lender, okay? So the best way to do that is through referrals, whether it be a referral from a friend, a family member, someone that you trust who's had a good experience with a lender. And a lot of people get referrals from their, who they usually start the relationship with their real estate agent, and real estate agents have had years of experience and have worked with many lenders. So they've kind of narrowed down who the good ones are. So definitely listen to your real estate agent. If they refer a lender, reach out to that person and start that relationship and see if there's a good fit there. So that's a great way to start.
And then, everybody wants to know what the interest rate is. In fact, I mean, that's kind of where people go immediately. But as you said, that isn't necessarily the best way to go, because nobody holds anybody's feet to the fire on a quoted rate until you're ready to buy it.
And it's not really tangible in the process they're in, okay? So it's there's a period of time where interest rate will come into play, and there's a couple different steps in that, and it obviously is a key feature into getting financing, because you're borrowing hundreds of thousands of dollars in some case. You want to know what the cost is going to be over time. But we have to go in the appropriate steps to get to that point. So the second piece is, and this is the way I do the process, which I think is the most efficient, is having a one-on-one consultation or one-on-one conversation with a client. So a client will call me and say they were referred by Kenny, for example, and we'll talk through, okay, what are you trying to accomplish? We'll chat for maybe 10 minutes. We'll get to know each other. I'll get an idea of what they're trying to accomplish and what my objective is, and I think the consumer's objective should be during that initial consultation or conversation is see if it's a good fit. Just see if the energy's right and the chemistry's right, and if it's worth investing your time.
It's like a first date.
It is, actually. You want to make sure that it's a good fit. You don't want to go through this process and kind of expose all of your financial information to someone that you don't really think, A, has your best interest at heart, who you don't think you'd have a great experience with, and, trust your
Otherwise, you're like the guy who
instincts.
picks up the girl in the Ferrari on the first date, right? Like, hey, girl, what's up? Jump in my Ferrari. Let's go.
You're full of analogies
I
there.
know. That's what I do.
So that initial conversation will progress into the next step. Okay. So if it mutually feels like a great fit, what I think is the next step is you want to get an application started. Okay, whether that be over the phone, online, whatever, face to face, and then the lender needs to collect all supporting documents. Okay. W-2s, pay stubs, bank statements, tax returns, all the stuff that a lender needs to review, because I view that first conversation, that 5 to 10 minute conversation, as a pre-qualification. The next step is to progress to pre-approval, and that's really the key, is you need to get pre-approved and have all your information ready, so that way if you go to make an offer on a house, and the seller knows that the financing is waiting for them there.
I mean, in some ways, there's so many intricacies of getting a loan, and at some point in time, you're going to have to expose all of them and see what's weak and what's strong.
You are, and the most efficient way to do it is let's get that all on the table from minute one. There's a lot of stuff you got to get together, so let's get it all in one bunch. Make sure we have all our ducks in a row and organized. So now that lender can truly be an advocate for you, and that lender and your real estate agent can work together as you're making an offer to bring different things of strength and teamwork together as you make that offer, and you're going to have a higher probability of getting that home under contract. And part of that gathering all the information kind of progresses us to the formal pre-approval consultation, which you can do face-to-face, over the phone, web meetings, whatever. That is the stage where you're going to introduce programs, options, what you want to know as a buyer is, and what I always go over with clients is how much are you pre-approved to, and let's work our way down to a level you feel comfortable. And then we're going to go over different scenarios with numbers so that way you're clear. And that's where the first step of interest rates will come into play, because we have to have a basis for the numbers.
Right.
Okay? That's, again, by no means should that be quoting a rate or a premise for shopping. That should be, hey, give me an idea of where rates are today from the sake of what my payments could be.
Ryan Leopold joins us with the Cobalt Mortgage. So now you kind of get this idea of where rates are. Which, of course, to a lot of consumers is like esoteric. In fact, I think a lot of people probably view that as, he's telling me an idea so he can make it higher later. Right? I mean, that must be something people run into, and that's kind of a misconception.
Well, it's a challenge, and then it all comes down to the credibility of the lender you choose. Okay, so some lenders may just come out of the gates really low in interest rate to make themselves look good, which I think is doing a disservice to themselves and a disservice to the consumer. I think the efficient approach would be, hey, this is an idea of where the market is, especially now more than the last 2 or 3 years. We have to assume that rates are going to continue to go up. Okay, so if we're doing that pre-approval phase and we're talking about numbers where someone feels comfortable, I think it's better practice to actually estimate higher than where current rates are. So that way in 30 to 60 days, once you are under contract, you're already kind of prepared that, hey, my payments are going to be this. And if it gets better, just in case rates do come down, it's for the better, not for the worse.
Right.
And we're not putting you in a position where, you did qualify for a $400,000 home a month ago.
Right.
Now it's $350.
Sure. So when this is all said and done, we just have about a minute left, but you get pre-approved. Now you're out shopping for houses, and rates do change. I mean, where does the responsibility lie?
Well, I think there's two phases. One, I think a good lender is going to stay engaged with their buyers every step along the way. So it's not only that conversation, that consultation. It's, hey, you're going to be out looking at homes every weekend. You're going to want to run some numbers. You're going to want to kind of get a feel for where the market is. We all need to work as a team to help you achieve your objectives. Real estate agent, lender, and you as the client. You're part of this team. We're all in this together to help you. So stay engaged with your lender and make sure that you're getting new numbers and getting new pre-approval letters and whatever you need as you're out in the process of searching for homes, because in a lot of cases in this market, you're going to have to make quick decisions. So we want to make sure you make quick decisions based on all the facts on any given day.
Absolutely. And I think gathering all those facts is such a key element. I mean, you have to know what it is you're dealing with. If you have a ding on your credit score, you need to understand that that is something that can be fixed. Mm-hmm. And if you have, but it's not a game changer. If you have a ding on, you have a small gap in employment, that's something that you have to recognize, but it can be fixed. And until you understand all the details, it's almost impossible to figure out what those are.
Absolutely.